Good afternoon, everyone, and welcome back to the Moneycontrol live stream. You're watching markets with Santo and CJ. Well, it's a day of caution on the Wall Street today as we look forward to that crucial jobs data that is due in the US market later in the evening. So clearly, after 8 sessions of gain, the Nifty and Sensex look set to end on a lower note, and profit booking is quite evident. But from a bull's perspective, I think the heartening part of today's session would be the rally that we are seeing in the broader market. The outperformance there clearly has been one of the themes of the week, and the small and mid cap stocks, the Nifty, the Nifty small cap 100 and Nifty mid cap 100 are quite firmly in the green territory, while the Nifty benchmark or the Nifty 50 has fallen nearly 1%. That said, one of the reasons why we are seeing a little bit of caution in the market is also the unwillingness among traders at this point of time to carry long positions overnight because of that US jobs data that is due later in the evening. You don't want to be caught on the wrong side of a trade, Santo, given that generally you have seen a very hefty profit the past 8-9 sessions, and therefore it's not so bad to take some of that profit and realize it actually.
Well, I don't think traders should be too worried about the US jobs data, because I think they've already made up their mind that come what may, interest rates are set to go down, and the Fed is going to cut rates earlier than anticipated, although J. Powell has made it very clear that interest rates could stay elevated for some more time to come, or at least till such time as inflation is under control. But that said, yes, CJ, heartening for the bulls that finally mid and small cap stocks too have joined the rally, and this possibly could mean that we could see an extension of this up move. The biggest factor or biggest lacking factor in this whole market was that you're not seeing the same kind of participation from second line stocks the way you had seen when the market had been rallying earlier. Now that has been fixed to some extent, so probably this rally could have some more legs now. Over to the FNOQs, we are seeing a build up of long positions in futures of BHEL and AB Capital, both very interesting stocks. BHEL for that matter was written off not very long back, and although the fundamental side still it is a theme story, I would say, at this point in time. You need to see some meaningful improvement there, but the market already seems to be very confident about it. AB Capital also, Aditya Birla Capital, the change in management there seems to be working pretty well at this point in time, although it has to still reflect in the numbers. We're also seeing short build up in futures of Eicher Motors, M&M and Ashok Leyland. So suddenly the mood for the auto sector in general appears to have turned a little bearish.
Absolutely, Santo, and thank you for those FNOQs. Moving on to the stocks that were buzzing in trade today, and a very surprising name on your list, I see.
Well, Navneet Education now, it's one of the dominant players in both the publications and stationery business now. The play on Navneet Education is that it is expected to benefit in a big way under the syllabus changes under the new education policy 2020. Besides that, CJ, also there's an increasing shift towards many state boards are slowly moving on to, many schools are moving towards the CBSE and ICSI curriculum, and Navneet there is poised to capitalize from the change in trend because it has a subsidiary called Indianica which is into exploratory learning through innovative technologies. Besides that, CJ, the stationery part of the business is also doing well, and it's got a very diversified revenue stream, considering that 50% of the revenues come from its publishing business. There's a certain amount of cyclicality there because syllabus gets changed only every 5 or 6 years, but at the same time stationery business lends that stability to the overall revenues. And also don't forget that it's one of the largest exporters of stationery from India, and US is the key market for Navneet. So things looking pretty good, and there's also the K-12 techno products arm of Navneet, which is into digital classrooms, and there Sequoia is going to invest some money, close to about $50 million, and the overall valuation of this arm at this point is about close to about 700 crore. Now the marketing expenses towards that had led to some kind of pressure in the second quarter earnings, but from a longer term perspective, the stock is fairly valued according to the analyst at Moneycontrol.
Well, it seems edtech platforms have not gone out of fashion, even
not at all.
The sort of correction that we have seen a lot of edtech startups in unicorns over the past 12 months. That's it, Santo. Yeah, I take your point that of course on the fundamental side the things are looking quite upbeat as far as Navneet Education is concerned, and that is clear from the fact that the stock has rallied about 45%, I think, this year, if I'm not wrong. But that said, I think that if you look at the technical setup at this point of time from a very short-term point of view, that is looking a little weak because the stock has taken some bit of a profit booking over the past 1 month. The stock is down about 7 to 8% in the past 1 month, and if you look at the RSI indicator, which is generally a good trend indicator or a momentum indicator, that is at this point of time below the 45 range, so clearly indicating that there is some bit of weakness to come on this counter. So I would not be surprised that maybe in the near term you could see some traders taking their profits on this counter, but possibly in the longer term, if the story is executed as the projections are, then clearly the stock could perform quite well going ahead. Well, one stock that is clearly beating the general pessimism in the market is Paytm today. The stock soared amid renewed optimism for the company's growth as well as profitability. Now, let's not forget that Paytm has told analysts earlier this year that it aims to become profitable, adjusting for employee stock option costs at an EBITDA level by the September quarter of September quarter of FY24, that is next year. Now, yesterday they had a meeting with all of the analysts who are tracking the stock, and there they gave an additional guidance wherein they said that they expect to generate free cash flows over the next 12 to 18 months. Now, CLSA believes that this is in line with their own view that the cash burn at the company is likely to extinguish or basically end over the next 4 to 6 quarters. So clearly a very, very positive signs as far as the the profit vigilantes that have been after Paytm's life since the time the company has listed. Also on the business side, the company sounded very, very bullish. They said that they have been surprised by the momentum the business has seen over the past 2 quarters, and they are not really concerned that this momentum will not sustain. They are very much bullish that this momentum is likely to sustain going ahead. If you look at the loan disbursed by the company by value, it has grown about 480% on a year-on-year basis. The average ticket size, which was of course one of the major reasons leading to Macquarie's sell rating when the stock had listed a year ago, that has also jumped 80%. So clearly the company is at this point of time answering its critics and answering quite well, and that is one of the reasons why JM Financial, which so far had a sell rating on the stock, has today morning upgraded a stock to buy, as it feels that the risk reward on the counter clearly is very favorable for investors, Santo.
Well, this was the point I was making earlier also, CJ. From time to time, you'll see pessimism getting overdone, and in the case of Paytm, that happened when the stock fell to about 440 rupees last week, and part of it also were due to concerns about emergence of geofinance. So there are, I don't think the entire negativity has gone away, but at a certain price, businesses do begin to look attractive, and I think we're seeing something similar with the case of Paytm, although I hold to my earlier view that given that profitability is still some way off and that the business model is not very unique, there's no compelling reason for investors to pay very high valuations. I mean, at some point when the numbers start improving, there will definitely be a case, but should they be getting in very early? I'm not so sure. So we've seen a good pullback in the stock. It's rallied from about 440 or to 531, but I would still wait for some more time. I think this is kind of a strategic call that many bulls seem to be taking. We still will have to wait and see if it is out of any long-term conviction. I'm not so sure about that, CJ. Well, the next stock on our watch list today is Endurance Technology. Now, CJ is someone who's always been bearish on the two-wheeler segment for a long time, and the main market that Endurance Technology caters to is indeed the two-wheeler segment. But what is probably working well for Endurance Technologies at this point in time is that there's an increasing adoption of electric vehicles in the two-wheeler space, and that is the area that Endurance Technology mainly caters to. It's one of the prominent players in the aluminum casting, suspension, braking and transmission product space. That apart, CJ, the second quarter numbers were pretty robust. The margin still some way off from the mid-teen numbers that we've seen a couple of quarters back, but still it's managed to maintain it around 12%. And clearly at this point in time, valuations are also not too expensive. According to Moneycontrol Pro, at about 24 times estimated FY24 earnings. Order book is also pretty robust at this point. 250 crore worth of fresh domestic orders during the quarter just gone by, and the European business, well, there's been some bit of a contraction on a sequential basis, year-on-year basis. Clearly, the numbers have shown a good growth. I think the easing of semiconductor chips, that is again driving up production in at OEMs in Europe, and clearly Endurance Technology is benefiting from that.
Sando, I think yes, the September quarter was clearly a very strong from the company's perspective, but I think it also benefited from the fact that at that point of time a lot of the producers out there, original equipment manufacturers, were stocking up inventory at dealer level, largely in anticipation of a very strong demand during the festive season. Clearly, if you look at the November sales data, that picture has not played out. At this point of time, what seems to be the case is that now, dealers who are stuck with high level of inventory will have to, release that inventory, and therefore, going ahead, you could see a bit of a, volume downtick as far as the two-wheeler industry is concerned, and that is where my concern is for Endurance Tech, that going ahead probably in Q3, Q4, maybe in Q1 or FY24 as well, you could see some bit of slack in volume growth as far as Endurance Tech is concerned. That said, the other concern, of course, has been the cost pressures that the European business has been facing. There was, I think, 480 basis points of contraction in the margins of the European subsidiary in the September quarter, while the management did indicate that there could be possibility of some improvement there. But I think in general, those cost pressures are largely going to continue in Q3 as well, because of the fact that energy costs are still quite high as far as Europe and the European economy is concerned. So for me, yeah, it has played out quite well so far in the first and second quarter, but going ahead, I think you could see some bit of moderation as far as the earnings of the company is concerned, and therefore I'll be a little cautious on this counter, Santo, going ahead. Well, the last stock on our radar today is Astral from the piping industry and the piping sector. Now, the stock was performing quite well, as you can see on your screen, higher by about 5% after ICICI Securities upgraded the stock to buy from a sell rating earlier. Now, they believe that the significant presence that Astral has in the plumbing market could be very beneficial for the company. Now, at this point of time, according to ICICI Securities, plumbing market is set to see an upswing in volume growth going ahead, largely driven by the housing construction market. Now, we are in the midst of a construction season in India, and generally you see construction activity pick up. Now, we know that launches from residential project launches and all these sort of commercial property launches are picking up from real estate companies. So that is generally a very good demand scenario as far as piping industry is concerned, and that is where ICICI Securities is coming from in terms of its bullish view on the stock. Also, on the adhesive side of the business, this is the other segment that Astral has a major presence in. There, ICICI Securities believes that lower raw material cost on a sequential basis could result in an improvement in margins going ahead. So clearly, the fundamental side of the business is looking up for Astral, and that is the reason why the stock is also higher by 5% today in trade.
Well, it's up by 5% in today's trade, but if you look at the fall over the last month or so, it's fallen from a high of over 2,600 rupees.
Yeah.
It's been pretty steep fall, more than about 25 odd percent. I think, CJ, at this point in time, the market seems to be a little cautious. Also, if you look at the management commentary, it's been a little guarded. Now, they've said that volumes will start picking up from Q3, and some of the initiatives they've already mentioned that, but we'll still need to see that reflect in the company's numbers. Now, the exit margins that the company has set for this year, FY23, is about 15%, 15 to I think it's about 16 odd percent.
Yeah.
Is the exit margins that they have set, which means that they'll have to do at least 17% in both the coming quarters, and the management itself has guided that raw material prices could be quite volatile. So that perhaps explains the caution that the market is having and the steep sell-off in the stock over the last month or so.
Well, Santo, I think the only, of course, when that management commentary came out, it was probably after the second quarter earnings, and I think after that, because there has been almost a month-long, gap, I think what ICICI Securities has learned from its dealer check, I think that is why it has changed its point of view. Of course, at this point of time, ICICI Securities is probably the lone voice in the market. We'll have to wait and see if other, analysts follow suit and if they are seeing the same sort of situation developing for Astral or not. But clearly, I think a lot of bargain hunters or short-term traders would probably look at this opportunity to trade that maybe the earnings might turn around for the company going ahead.
Well, and with that, a quick check on the markets. Indices continue to be under pressure.
Yeah.
Sensex is down by a little over 400 points. There's been a mild recovery of sorts, but it doesn't look like we're going to close in the green anyway. CJ.
Absolutely, Santo, and it is the broader market that is doing absolutely, stellar performance today. The Nifty Mid Cap 100 up about 0.8% at this point of time. The Nifty Small Cap 100 Index higher by about 0.46%. So clearly a very strong day for the broader market, but sectorally is the auto space that is really dragging the market down. The Nifty Auto Index down about 1.1% after the November sales data came out, and we mentioned this in the morning. We were discussing it, whether the auto rally could hit a speed breaker, and clearly it seems like we have at least hit a speed bump, if not a
CJ said
total.
so.
No, it was an overall discussion. Of course, nobody should take credit for it. It is what it is out there. And of course, the banking names also surprisingly doing quite bad. I mean, generally, they were the one who were holding the market higher on even bad days for the market. But today, even the Nifty Bank Index down about 0.4%, Nifty IT down 0.2%, and Nifty FMCG down about 0.5%.
Well, and what are the key things that we'll be looking for? You mentioned the jobs data.
Yeah, absolutely,
Besides
Santo. I mean, that will be in the mind, foremost in the minds of traders and investors today. What sort of non-farm payrolls data for the month of November comes out. Of course, this will be the last payroll data that comes out before the US Federal Reserve's next monetary policy meeting. So it holds a lot of significance in terms of how it could affect, or what sort of a reading it will give on the US economy going into that meeting. Also, next week we will have our own central bank, RBI's monetary policy committee having its meeting, and the outcome of it, that meeting will be released on Wednesday. So a big event, big policy event happening for our markets next week. Also, on the on the general side, you have the Gujarat election outcome coming out. So that election outcomes, such as big as Gujarat, tend to have some sort of sentimental impact on the market, and the poll numbers will come out on Thursday, if I'm not wrong. So clearly, the two very major events on the economic front happening for our markets next week, and that will probably dictate how we end the rest of the year.
Well, and with that, we wrap up this edition of Market with Santo and CJ. Thanks for watching, and I hope you all have a great weekend ahead.
Absolutely, guys, and keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 9 a.m. Monday morning. Till then, have a great day ahead and a great rest of the weekend.